Welcome to a journey into the world of dividends, a world that has paved the way to wealth for one of the greatest investors of our time, Warren Buffett. Dividends, in essence, are payments made by corporations to their shareholders, typically in the form of cash or additional shares. They represent a portion of the company's earnings, distributed as a token of gratitude for the trust investors place in them. But here's the kicker. These dividends can be reinvested, purchasing more shares, which in turn generate more dividends. It's a snowball effect, a cycle of growth that can lead to substantial wealth over time. This strategy, known as dividend reinvestment, is a cornerstone of long-term investment and a path to financial prosperity. Warren Buffett, the Oracle of Omaha, is a master of this game. Armed with patience, foresight, and a keen understanding of the power of dividends, he has become one of the wealthiest individuals on the planet. Now let's delve into his story. If you are enjoying this content and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us, and remember to comment and share. Born in 1930, Warren Buffett's story begins in the heart of the Great Depression. Coming into the world during a time of economic turmoil, his journey to becoming one of the most successful investors of all time was anything but ordinary. Growing up in Omaha, Nebraska, Warren's early years were steeped in a fascination for business. This wasn't surprising considering his father was a stockbroker and a four-term congressman. The world of numbers, stocks, and economics was essentially his playground. As a young boy, Warren was not your typical child. He was a numbers whiz, an entrepreneur at heart, and possessed an insatiable curiosity about the workings of business. From selling chewing gum and Coca-Cola door-to-door to delivering newspapers, he was always on the lookout for ways to earn money. This early interest in business was a clear indication of the path he was to tread. But what really set Warren apart was his first investment, at the tender age of 11. Yes, you heard it right, 11. He bought shares in a company called City Service, an oil service company. Although this investment didn't turn out as planned, it taught him a valuable lesson about patience in investing. Even more fascinating was his grasp of the concept of compounding interest at such a young age. He understood the power of time in growing wealth. He knew that the earlier he started investing, the more time his money had to grow. This fundamental understanding of the power of compounding interest became the cornerstone of his investment philosophy. In his teenage years, he ventured into more sophisticated investments like buying a 40-acre farm financed by his savings and earnings. He also invested in a business owned by his father and saw firsthand the power of dividends in generating income. Warren's early years were not just about making money, but about understanding the principles of investing and the value of patience, long-term thinking, and compounding. These learnings laid the foundation for his future success. The seeds of his success were sown early, and dividends played a key role. This was the beginning of Warren Buffett, the legendary investor whose strategies continue to inspire millions around the globe. Buffett's investment philosophy revolves around a simple principle: buy and hold. This mantra might seem overly simplistic, but it's at the heart of why Buffett is one of the wealthiest people on the planet. Buffett's approach is all about patience and the long game. He doesn't buy a company's stock because he thinks it will skyrocket in value next week, next month, or even next year. Instead, he invests in businesses he believes will be profitable over the long haul. Businesses that are stable, have a competitive advantage, and crucially, pay consistent dividends. Dividends, in essence, are a share of a company's profits returned to the shareholders. They provide a steady stream of income, separate from any potential capital gains. Buffett is drawn to such companies because they typically have a solid track record of profitability and a business model that withstands the test of time. Take, for example, consumer goods and utility companies. These businesses tend to generate consistent income because, let's face it, people will always need to wash their clothes, turn on the lights, and keep the refrigerator running. And because these companies are consistently profitable, they're able to pay out regular dividends to their shareholders. Buffett's fondness for dividends isn't just about the income they provide, it's also about the indication they give of a company's overall health. If a business can afford to regularly return a portion of its profits to its shareholders, it's a good sign that the company is doing well. But remember, Buffett doesn't just chase the highest dividend yield, he looks for companies that have a history of not just paying dividends but growing them over time. It's this growth that can lead to compounding returns, which is where the real magic happens. Over the years, Buffett's buy and hold strategy, coupled with his preference for steady dividend-paying businesses, has made him an investment titan. And it's not just about the money. It's about the philosophy behind it, the belief in patience, consistency, and the power of dividends. Buffett's strategy is a testament to the power of patience, consistency, and dividends. One of Buffett's most famous investments, Coca-Cola, exemplifies his dividend strategy. Let's take a step back to the spring of 1987. The stock market had just experienced a significant downturn, and Warren Buffett, equipped with a keen eye for undervalued businesses, spotted an opportunity. Coca-Cola, a global brand with a reputation for quality and consistency, was on sale. Buffett, in his characteristic style, seized the opportunity and invested a whopping $1 billion in Coca-Cola. Now let's talk about dividends. Coca-Cola has been a consistent dividend payer, and Buffett has reaped the benefits of those payments over the years. In fact, by the end of the first decade of his investment, Buffett's Berkshire Hathaway was receiving an annual dividend yield of over 30% on the original investment. That's right, a return of over 30% each year, just from dividends. But the story doesn't end there. Buffett isn't known as the Oracle of Omaha for nothing. He understood the power of reinvesting dividends, and he put that power to work. By reinvesting the dividends he received from Coca-Cola, he was able to purchase more shares of the company, which in turn led to even greater dividend payments in the future. It's a virtuous cycle that has allowed Buffett to grow his wealth exponentially. So, what's the takeaway from this case study? Well, it's simple. Dividends matter. They provide a steady stream of income that can be reinvested to generate even more wealth. And when you invest in high-quality businesses like Coca-Cola that have a track record of paying consistent dividends, you can create a powerful wealth-building machine. This case illustrates the long-term wealth-building potential of dividends. The story of Buffett's investment in Coca-Cola serves as a shining example of how dividends can be used to generate substantial wealth over the long term. It's a strategy that has served Buffett well, and it's one that could potentially serve you well too. So, how can you apply Buffett's dividend strategy to your own investments? Well, to start, you need to adopt a patient mindset. It's important to remember that investing is not about quick wins or overnight success. It's about making informed decisions and sticking to them for the long haul. Buffett himself is known for his buy and hold strategy, which involves purchasing stocks and holding on to them for many years or even decades. Next, you'll want to do your research. Look for companies that have a history of steady dividend payouts. These companies are often in mature industries and have a track record of generating consistent cash flow. They are the type of companies that Buffett refers to as having a moat, or a competitive advantage that protects them from competition. But don't stop there. Go beyond the numbers. Look at the company's management, their business model, and their plans for the future. Are they innovating? Are they adapting to changes in the market? Buffett doesn't just invest in companies, he invests in leadership and vision. Finally, think long-term. Investing in dividends isn't about getting rich quick, it's about building wealth over time. Reinvest your dividends back into the stock, allowing your investment to compound and grow. This is the magic of compounding that Buffett often talks about, the ability to generate earnings on top of your earnings. And here's a pro tip: diversify your portfolio. Don't put all your eggs in one basket. Even Buffett, who is known for his focused investing style, has investments in a variety of sectors and companies. So, to sum it up, be patient, do your research, think long-term, and diversify. These are the pillars of Buffett's dividend investing strategy. Remember, the journey to wealth is a marathon, not a sprint. And like any marathon, it requires preparation, endurance, and a steady pace. So, lace up your investment shoes and let's get started on this journey together. Warren Buffett's journey to wealth through dividends is a tale of patience, wisdom, and consistency. We've taken a deep dive into the world of dividends, traveled back to the early years of Warren Buffett, and examined his investment philosophy. We've seen how he applied this strategy with Coca-Cola, turning a seemingly ordinary investment into a gold mine. Remember, investing in dividends isn't about quick wins, it's a long-term game. It's about finding companies with strong fundamentals, companies that consistently pay dividends, and holding on to those stocks for years, even decades. This is the path that Warren Buffett took to build his immense fortune, and you can do it too. The journey to wealth is indeed a journey, one that requires patience, wisdom, and consistency, just like Buffett. So let's embark on this journey together. If you found this video helpful, please subscribe, like, and share. Remember, the road to wealth is a journey, and we're here to help you every step of the way.